Okay, guys, we're going to take a look at next Wednesday. We've got end of month, okay? I kept getting confused earlier saying it was end of quarter. It's not. But the quarterly ones, no doubt, stay effective no matter what month you're on because the concept is there. The dealer and the funds want to stay inside these white lines, and there are various different ways I mark the quarterly distribution. I can do 90 days, I can do 3 months, I can do 12 weeks, and I can do it the calcs on the open and close of that session. So the 3 month is the number of trade days in the month. The 90 days is just flat out 90 days, and the 12 weeks is just 12 weeks. And that would be the number of trade days in that week. So it changes up. So we have all the bases covered, I think. And the concept really is that bell curve going from the middle of the range, wherever, which range you're looking at. This one is the 12 week. So you can see, I think that's the 12 week. Confirm that real quick. 3 months. It's a 3 month. Okay. So here's your 3 month close mean right here. And you can see that it was support, and now it's going to be resistance for crude 79.82. And so we're right in the middle of this distribution. It's very hard to get a direction when you're in the middle. It will go up and down. The momentum is to the downside. I've got my min max on here instead of the Bollinger, and I've got my median on here also for the momentum. So there's no direction for crude for the quarterly. For the monthly, a little bit better of a situation here. You can see that we dipped outside of our immediate one area, and we're trying to move lower, but they were pinned here at this monthly one, and that's very common. They choose these as their risk, right? So they were trying to not have to move it lower. They were trying not to have to move their risk lower, but it did go to the mean of, let's see which distribution this was. That's out in the middle of nowhere. Let me take that off. Um, it just took the pin at this upper line right here, the 30-day one. So your monthly one, calendar day and trade days acted as support resistance for this daily candle. The last 1, 2, 3, 4 days. So you can see that the market is pinned between the 30-day one and the monthly one. Trade days versus calendar days. So we'll see if that will break out the lower one. If it does break lower, is the 4 week one. So that's 4 weeks in a month. So they can actually move their risk a little bit down and still be inside their monthly range. But that 78.76 is likely going to be the resistance. Because this is demonstrating that they're moving their risk out, which gives us a future lower guidance going into Wednesday. But with that said, we get a new month Wednesday at the close, midnight. Wednesday night, Thursday, we'll have a new month. So it starts all over again. Here's your weekly. You can see that crude, the weekly twos, held the range. And we had two means going between the weekly open and close. And price was in that sweet spot inside of them. And then sold off to the twos on my min max. You can see that we got down below the zero line, but we the market tried to, rally off of this two and was unsuccessful. They sort of pinned it to this two. So I do think that the market is trying to go lower going into Wednesday, so we'll see how that takes shape. We were just below our daily threes. We had one more daily three, which was the absolute risk line that they did not hit. So dealers had their risk sitting right here. So one thing of note, you can see how we got to the upper min max. I can get the momentum off of these levels so that when it does give you a red dot, like at the max line, I can give you a signal if you get a red bar to correspond with it, which may lead you lower. And this retest of the mean, of the daily mean, um, or is this the weekly mean? That might be the weekly mean. But the retest of the weekly mean right there, on my retest, you see how much lower this is, the momentum? That's quite a divergence. So you had a higher high and a much lower momentum. So that's a clear divergence. So on this red candle at the max line, that really was your go signal. And I will show us how to do this on Wednesday. Our lesson will be how to get bloodhound signals on the min max using momentum, and build that for you. I can do we can do that on Wednesday. And likewise, you got a reversal signal down here at the one. So your thresholds are very important. The thresholds per your daily or 30-minute level stay pretty consistent. So when you get to these upper and lower levels, you will see that reversal. So that RTM occurs usually at these locations for momentum. And then momentum precedes price, right? It's a leading indicator. It may not immediately give you the signal, but the momentum's going up, that price is going to go up within a couple of bars. And here's a good example. The momentum was coming down, but the price went back for that one last test and then it sold off. That was a really good second entry right here with the lower divergence. So I can give you this template on Wednesday. Make up for my shortfall of calling the quarterly expiration in July and not June. All right, so let's take a look at some of these other markets. Let's take a look at the SPX real quick, the cash index. It's got an interesting distribution. It traded to the quarterly twos up and down, and then settled inside the quarterly one. So that led me to believe that they are trying to keep this long above the quarterly one. But since we don't have to worry about that on Wednesday, that's not going to be as big of an issue. The ones break all the time. It's an American style contract, and they're able to move in and out to the monthly or a weekly or even a daily level if they would like, and then jump back in that quarterly contract when it becomes more clear. So right now you can see that they're really pushing it down hard, momentum, and they're trying to get it off of this lower monthly one. So they've moved their risk down. This is what it's telling me. It's telling me that the risk has been moved lower, and they're trying to protect that monthly one right there. because once they, that's a 4 week one, but it's the same concept. Once they move the risk out, they would like to keep it. There is the possibility that it could go higher, break that, and then fill this gap line again. But I think it will fail below the JHEQX 5565 short call. I think it will fail right here at this 5551, 5550 area, um, if it does fill this gap. But you can see how hard that they are pushing this down. They really are trying to get this to go down, or they were on Friday. Okay, and here is the weekly, and you can see that we got into some of that heavy selling pressure on the weekly, and they're keeping it above the weekly 3 and below the weekly 3 of the 1 period. So here's the 14 period weekly 3, and here's the 1 period weekly 3. So they were keeping it in between those two in that range. And we're right here on our 0 line. So here is the daily, which is really interesting because you can really see this push very much off of the upper um, max. In fact, it gapped down. It didn't even give us a red dot on the line. It pushed off the level very, very hard right here on our max line. Um, and that was also a BTIC close spread between the SPX and the ES at 12:30. We were watching that. Very interesting. So I would, hesitate. It's because of the way that the quarterly is right in the middle of the distribution to say one way or the other that this is positive or negative. I don't think we've got anything to worry about except for this monthly contract going into next week. And, the funds don't like to give up their profits. So the funds would like to fill that gap, but the big banks would like to get it down off of their ones and move their price down. So probably, 53.78, 53.66 if we can get it to go down. If we bounce it back, then that gap will get filled. But there's room for the downside. That's another thing that you need to see. So this monthly contract will generally top out at 10 to 12 on the downside. So we can see how these momentum periods play out. So let's look at 12. Seems to be the magic number to capture this. And then if that breaks, then it can go down even further. But I just wanted to point out that we're in a strong monthly down momentum, and there is room to run for 3 days. So for that reason, I was sort of getting my little bearish position on, thinking that they, especially if they hold that 4 week one right here, 54.60, then that's an easy call to get it down to 53. 66. Anything above right here where we are, 54.70, likely will be a gap fill. So this is a no-brainer right here on the monthly. Weekly and daily are just flat, non-directional. So it's really this monthly contract. All right, let's take a look at the ES. Okay, you can see that the quarterly contract likewise is very negative momentum with room to run. So we can easily get down to that 15 below, Tuesday, Wednesday, Monday, Tuesday, Wednesday. Plenty of room for that if they allow it. More downside. The funds are not going to like it, right? They don't like coughing up any more money going into those last 3 days. In fact, they may prefer to put that back on the zero line and try to go up to those upper quarterly ones or this and keep it inside the monthly ones. Let me refresh this chart. Every time you change from like SPX to ES, be sure to refresh the chart. So very strong downside momentum, but they ran into the monthly one, which acted as very concrete support at 54.30. So 54.37, 54.26. So 54.26 would be the low, and anything above just back inside the monthly distribution. So we'll see if that 54.26 holds Wednesday, which it is looking like it might, even though you had that strong momentum trying to break it. So for the weekly, I do know I need to refresh this. Here we go. Weekly threes, we traded between the 3 and the 1, and the min max just very much traded the min max beautifully. Got that downward push off of these weekly ones, and so they had already moved the risk out, and they did not want it to go back inside. So that was being protected, and Friday is over, so we get a new weekly distribution tonight at midnight. I'll be posting those charts in the morning um, so that you can have your current weekly levels. And let me refresh this. I'm not sure. I think I hit the wrong button there. So here is a interesting scenario where we had a really upward sloping median and mid-max moving higher, but we got to our spread, the SPX BTIC at 12:30, and they sold it really, really hard and pushed them off the level. And I think that was more demonstrative of that weekly one. Did not want to get it back inside that. I don't know why that keeps shifting. There it is. So they got it off the level. We'll get a new weekly number, and we'll just see what happens to the SPX gap if that gets filled or rejected. The monthly level, again, 54.30, 54.25 for the downside risk going into next week, and just a flat daily momentum. All right, let's take a look at NQ. Okay, for the NQ, you can see that we're in the middle of our quarterly range, um, but we're at the end of the momentum. So we're sort of like at the end of the momentum, and that's not bearish, is it? Um, for the monthly contract, however, there is the same scenario where you're overextended to the downside, getting really close to these lower levels. I think this looks like a minus 68. And we're sitting on it. So we are sitting on it right now. And so they started to move it back up, and you're at your monthly twos. So the NQ looks more bullish than anything else, which may, lead SPX and ES to go higher and fill that SPX gap. That's another reason to support that. So definitely be aware that we're at the end of momentum on the monthly NQ. Not to be confused with June, it is July, and it expires Wednesday. Yay, new months, new ranges. I like new months and new ranges and new weeks because the market can really move. So we're going to get some volatility. Even if we do go up to fill that gap, because of the extra new volatility that we'll be getting in, that is more bearish than bullish. And considering where we are with that JHEQX, I think if that comes back up to kiss that 5550 on SPX, then it's going to be goodbye, sayonara. Be careful, all you bulls. Don't get taken in by a couple of days of overextended monthly momentum to make you think that you're in a uptrend. Like I say, we get a new month on Wednesday, and they can move this back to the mean Monday, Tuesday, Wednesday, and then you've got a new ball game. Okay, and we're flat weekly, and we're flat daily. Flat, flat, flat. So, all right, it'll be interesting. I hope this helps. I've got the min max momentum, which I like better than the Bollingers, to tell you the truth. Um, so I'll give you that and get you a template up and running so that you can match my screen. All right, guys, we'll see you Wednesday. Thank you.